Hi and welcome back to Cheeky Crypto. My name's Chris and it's fantastic to have you back with us for another video. And in today's video, we're going to have a look at the importance of risk management, how to implement risk management on the journey to becoming a crypto millionaire. Now, we see lots of hatred thrown towards influencers just purely because it's seen as a bit of a disclaimer when a YouTuber or an influencer says, go do your own research. We're not financial advisors. And I think, yeah, there's probably an element of, yeah, it is a disclaimer, but at the same time, Nick and myself want to be very, very different in this space. We want to harbor, adoption within the crypto space. Now, we're all about teaching people to fish. Nick has done, courses on Elliott wave theory, not charging people for it and spending one-on-one time with our community to teach them. And, we've given people jobs off the back of this, right? And it's fantastic. But that's just one element. And, because we want to be different, we want to do a very, very important video talking about risk management and get people thinking about it a little bit more. Now, you might think this is a really boring video, but it's probably the most important video you'll watch in crypto, in my opinion. Let me know what your thoughts and opinions are in the comments below, and also cover off any risks you feel that I've missed off, because I'm not going to cover them all in this video. There is a write-up on our Patreon, so do check that out if that is of interest. Link is in the description. And we have a fantastic community talking about crypto 24/7 in our Discord. Link is in the description. It's free to join. Lots going on in there, so do check it out. Right, let's get down to the desktop. So we're here on Patreon, right? And I'm just going to go through the risks that we're going to cover off here, right? So we've got diversification. I think this is a huge risk. If you had been sat in Luna, for example, and Luna was seen as, in many people's opinions, as a blue chip cryptocurrency, awesome, was going to go places, and amazing project. If you had been all in Luna, you would have been screwed, right? Like, that's why diversification is very, very important. We'll come on to that in a bit more detail a bit later on. We've got valuation difficulties. So, very difficult to valuate a project in the crypto space. Now, we are very, very good at, finding projects that are undervalued. Like, we've called out so many, and you just have to look through some of the calls that we've made on the channel historically. People have made 126x on just one of our calls. So there's lots of calls, don't get me wrong, you don't get them all right, but we got the vast majority right, and we got far more right than we got wrong. And we're going to continue this. And as we grow as individuals, Nick and myself, and the community grow as individuals, the community is fantastic at supporting one another and navigate this space safely. We're all learning, we're all getting better, we're all getting better at what it is that we do. So I'm expecting an even bigger percentage gain or money to be made in the next cycle, just from all the learnings of the mistakes that you make in this space are so important. But what's more important is learn from people that have made those mistakes so you don't need to. And I think that's the beauty of our Discord, because we have a fantastic community there supporting one another. And it's a place where you can ask questions, before if somebody contacts you, for example, and it seems like a bit odd, or you're not sure, it could possibly be a scam, you can ask in our Discord, right? Well, that's what we're here for, right? We want to make sure that adoption of cryptocurrency is a good, positive thing. And for every person that gets scammed or loses all their money, this is bad for adoption of crypto. So we're doing our bit, at least we believe we are, to harbor that adoption. So yeah, valuations, a very difficult aspect, but we've got a fantastic track record, and we'll cover that in a bit more detail. Regulatory and legal dilemmas, again, another subject, and again, it's open to interpretation, this one, but I will cover my thoughts and opinions on it, and hopefully you guys can and girls can come up with your own sort of risk management plan off the back of it, right? That's kind of the idea of this video. custody problems. Now we all know about Celsius, Voyager, so we're going to delve into the risks there. We've got earning and staking again, so there's earn programs out there, Celsius, Voyager, crypto.com, Binance. There's all these centralized platforms that do earning programs, and then you've got staking with like stake pools and yield farming and all this sort of stuff. So we're going to go through some of the risks around some of that, but again, it's really a video to get you thinking about these risks. And then the final one that I've got on here is stable coins. Now, I've done some fantastic write-ups in our Patreon. I think I opened them up for everybody because we want everybody in the community to benefit from these. And basically talking about the different types of stable coins. So I'm going to come on to the importance of that a bit later on. We'll chapter it all up so you can skip to the bits that you're really interested in and come back to it and so forth. I hope you enjoyed today's video. If you do, show your appreciation, mash up that like button. I'd love to get a fantastic, obscene amount of likes on this video. It would be really appreciated. We are really working hard, Nick and myself, and our team as well, with the new podcast. Do check that out. Link is in the description. 24/7 we're working round the clock doing technical analysis for our members and so forth. And we're here to support people, right? We reply to all the messages. But anyway, let's get into the real details of this, right? So risk management to consider, and this is very much like my opinion. But I just want people to get a flavor of the things that perhaps you're not thinking about that you should be thinking about, right? And you don't have to utilize the examples here. They are just purely examples, right? So the simplest way to diversify your crypto portfolio is by type. Now, what I mean by this is, you've got different sectors of the crypto space, right? So layer 1 is a good example. Layer 2 is another. You've got DeFi, you've got AI, you've got cybersecurity, and I have done a video series where I break down the different sectors of the crypto space. Check out the playlist on the YouTube channel, and I call out the ones that I think are fantastic in each sector. So yeah, look, breaking it down by sector of your portfolio is great. What this means is you diversify in your portfolio. Not all your eggs are in one basket, and not only that, you've got exposure to different sectors, and some of these sectors will balloon in price in different phases of a cycle, and we do work in waves, so you want to be fully conscious of. But that's one way. You can do it by industry again as well. And you can do it by location, right? So where are these projects actually based? Are they based in the US? Are they based in Africa? Are they based in the UK? Dubai, all these different, places. And there's good reason to perhaps do it that way. You've got different regulations coming from different parts of the world, different governments, and they're all going to be slightly different. So I think this is something to definitely, consider. Now, this write-up will be available in our Discord, so do jump in and you can read through this at your leisure. This video is really just to sort of scoot through it. Okay, so valuation, risk management. Now, again, I think this is really, really important. There's a lot of people that got into like Bitcoin at like $65,000, for example, and are now looking at the price like, what? Had they looked at the valuation of Bitcoin and what it's able to do, they might have realized actually wasn't undervalued, right? So some of the things that we should check when looking at these projects before we invest in them, and YouTube is a fantastic place for you to find out about projects that YouTubers and other influencers are talking about. But as we said, go do your own research. That should be like the start of the process. Oh, Chris is talking about XRP. Let me go look into that. Let's see if the backers of the project are there and so forth, right? So anyway, let's sort of get to this, right? So we've got the backers of the project, so the VC firms, who's backing the project, right? I think that is something that is very worthwhile looking at. The other thing to look at, well, actually before we move on that, maybe they have fantastic backers, but maybe they have some obscure VCs that nobody's heard of. Could be a red flag, right? Checking the team, and the team is really important. Now, I normally focus on the CEO, The CMO and the CTO is very, very important as well. Again, you're looking for the amount of experience they've got in the sector, the amount of experience they've got with like the technology. Have their previous businesses been successful that they've been part of? Have they not? All that sort of stuff's really important. I have done a separate video on our Patreon where we go into how I personally research a team, utilizing LinkedIn, GitHub, and various other methods, right? And we are also looking for fraudulent activity within teams. Now, one thing that I would say is you can research as much as is humanly possible on each and every investment you make, right? There's going to be research that's carried out, and I've done this in the past where I've researched a team. I've been very, very happy. I've checked like for criminal activity, fraud, all that sort of stuff, and nothing's come up. And then one of the team drained the liquidity out of the stake pool, for example, and ran off with all the money. Like, if there's no history of it, it's not going to come out in your research. So there's always that risk. So I just want people to be aware of that. But really important, obviously scrutinizing the tokenomics again is very important. Things that I think we need to be looking at as well is the amount of supply, the supply that's going to be hitting the market. Are the team vested? What are the percentages that have gone out in marketing, team incentives, and so forth? Really important stuff. And then you want to gauge sort of the market fit of the project. What's the competition like? Where does it fit? Is it doing something different? And all of these things. Now, I am putting together some metrics for our members where I go into a lot of the detail of how I make up whether a project is good or whether it's not as good as perhaps I believe it should be. So yeah, do check that out once that's done. Regulatory and legal dilemmas is another area that I think is really, really important. In this write-up, I've gone through some of the key issues. And for me, I think we need to be really looking at the importance of our risk management when it comes to investing in some of these crypto projects, right? Because we don't want to lose the money that we've invested in the cryptocurrency. We want to look at perhaps whether it's a security or not, whether like, for example, I don't like privacy coins just because I think that they're going to be something that's frowned upon when it comes to regulations. Now, I could be way off on that, right? But that's just my personal preference. So I'm just not going near them because I just see it as a risk. My thoughts are, I love privacy. I think we need it. But I just question, like Tornado, is it Tornado Cash? I don't know what the project is where, all these scammers are sending their money to this Tornado platform that basically hides it from authorities and makes it almost impossible for you to track down where that money's gone. So those sorts of things I think will be regulated out of the space, but that's my opinion. So I tend to stay away from those sorts of things, but that's just one example. I'm not suggesting that you stay away from privacy coins, but you've got to weigh up what your risk tolerance is when it comes to the potential risks that are out there. And I think you've just got to look at the project you're invested in and just question, okay, what are the risks? Is it a security? Could it be deemed a security? What's the risk? Because you don't want something like what's happened with XRP happening to a project you've invested in, for them to basically be made to be a security. So yeah, all these things are really important in my opinion. Moving on, and we've got custody problems, and I think this is a big one. Lots of rumors of Coinbase, and what happens if they go bankrupt. You will lose your assets that are held on there. Nick and myself, we use Ledger Nanos, and there's a link in the write-up. There's a link in the description of this video. Definitely worth looking at that. That reduces the risk because you self-custody the actual crypto, and no one else has any responsibility for that bar yourself. And I think that's a fantastic way to hold your crypto. You can still stake to stake pools, like we have our Harmony 1 stake pool, 𝗕𝗘𝗪1. We have our ADA stake pool, 𝗕𝗘𝗪. These, you can still access through your Ledger and perhaps third-party apps still through your Ledger, giving you that, additional security. The thing is with centralized platforms and decentralized platforms at points is that, you know, they're, I guess, a target for hackers, you know, the centralized exchanges in particular, or lending protocols, because there's money that's there that hackers can access and steal. So, you know, you've got that aspect of things. But, you know, the one that we've seen the most is projects going out of business, going bankrupt, and basically the the collateral is theirs. It's not, you know, you've just lost your crypto, and that's a, you know, big realization to have if you're tied up in some of these protocols, right? You know, like the Celsius, Voyager, and so forth, right? And we've seen like Mt. Gox hack and poor security and all that sort of stuff. So, you know, for me, I keep all my crypto on ledgers. I used to, you know, as part of my risk management, I used to only put a maximum of 10% on like a lending platform like Celsius. So I have 10% of my portfolio tied up in Celsius, right? So I've potentially lost that. I'm writing it off in my mind. Now I'm sat here thinking, you know, I'm not happy with 10% of my portfolio being in Celsius. I would have been much happier if I had only had 5% exposure. And that's a learning for me. But, you know, you guys have got to come up with that risk management or that risk tolerance that you're happy with. Nobody wants to lose money. But if you had to lose money from your portfolio, would you rather lose 5% or 10%? And, you know, my thought process was I'd have 5% on Coinbase, I'd have 5% on Celsius, I'd have 5% on crypto.com. And basically, they're not all going to go out of business all at the same time. So it reduces that risk, and then it allows me to get my crypto off those exchanges or, you know, lending protocols, you know, if something was to happen. So, you know, that's my tolerances. But obviously, you know, everybody needs to come up with their own. And that is why I have those tolerances. Earning and staking is the next one here. So again, you've got the similar problem with the above, which I've just covered off around custody. If it's a centralized platform, then you run those risks. So you just need to work out what your risk tolerances are if you are going to follow those protocols and do it on a centralized platform. The other one is more around staking, for example. Now, with most stake pools, like the Harmony one that we have, Cheeky One, and the ADA Cheek pool, for example, you hold custody of that. You have keys to your wallets, and you can access that, and no one else can. I can't as a pool operator, and Nick can't as a pool operator. It's only you that has the access, right? And you can do both of those through Ledger, for example, right? So those are perfectly safe as long as you don't lose your keys or give your keys away to people and so forth, and don't get hacked, which I think the risk is really, really low in comparison to a centralized platform where there's, you know, multiple billions or millions on there, compared to somebody that's perhaps got 10,000, 100,000, or, you know, 500,000 on there, right? It's lower risk. So yeah, just my thoughts and opinions. Now, moving on to the final aspect of it, and that is stable coins. For me, stable coins have obviously come to prominence with everything that happened around UST, sorry, and Luna, the algorithmic stable coins. Now, one thing that I did go away and do was a write-up on the different types of stable coins, because I think it was really apparent to me that not everybody really understood what it was that they were holding, right? Some people were in UST, some were in like the new stable coin, is it USDD? I think Tron's stable coin. Others have been in USDT, USDC. There are so many, right? And DAI is another. And it was really apparent to me when I was researching some of these stable coins that actually on the websites they were very, very misleading. So, you know, you do need to go into the white papers, because some of them are saying they're backed 1-for-1 to the US dollar, for example. But actually, when you go into the white paper, they're loosely tied 1-to-1 with the US dollar. And if you read up a little bit more on them, you actually get a better understanding that actually they're not 1-for-1, and actually there's assets that are, you know, are backing them 1-to-1. Then you've got algorithmic, which is just to a code. You've got your actual ones that are, you know, are backed 1-to-1 to the dollar. But then you've got the question, they're centralized, so are they actually, you know, are they being a bit degen with the money that's being invested in them. So, you know, just make sure you understand what it is that you're invested in. You can't just, you know, read the website and then feel that, right, okay, take what they've put, you know, on there as gospel truth, go into the white paper, dig into it. The white papers for stable coins are really simple to read. It's not like complicated like some of the other protocols out there. They're normally straightforward and just tell you what it is that it's backed by. So definitely worth doing that, in my opinion. So those are just some of the risks. I could go on forever. I think this has been going for like 20 minutes. So I'm going to stop it there. I hope you enjoyed today's video. If you did, you know, hit that like button. Let's see if we can get like a couple of thousand likes. That would just be immense. Subscribe if you haven't subscribed already. Tapping that bell, selecting all the notifications. Really important that you do that so you don't miss any videos. And jump into our Discord. Link is in the description. Free to join. Not pitching you or selling you anything there. It's just a fantastic place to catch up with like-minded individuals chatting about crypto 24/7. And if you're interested in like regular TA, you know, our team does TA 24 hours a day. You can request TA and the team will do it for members. And yeah, there's just so much going on. 2 weekly AMAs, do write-ups on different projects, and then you can go away, do your research, all that wonderful stuff. So do check it all out. Really fantastic community that we're building here. And again, it's just to support everybody in the crypto space, and it's all about adoption. Hope you enjoyed today's video. Take care, and I'll catch you in the next one.